Good morning, everybody, boys and girls, ladies and gentlemen. Welcome to today's episode of Market Check. I am Snorlax. You guys also know me as Tommy. And of course, we are joined by Max, Tucker, and Will's Outlook, breaking down financial markets as we love to do. Happy Thursday, everybody, September 7th. And today is finally the day where we have seen, I think, some real weakness in the equity markets, right? The NASDAQ is down. I think the last time I saw it was, it's down almost 1% today. Or ES is down as well. I think a little more than 0.5%. So, this is the first time that we have had, some semblance of weakness in equities in quite some time. We had a minor pullback like 2 weeks ago, but as far as like a high time frame pullback, we haven't had one since we broke out from 4,200 on the SPX. I think that was in April, May, or June? I don't even remember at this point because it feels so long ago. I guess it was in early June, but just surprising, right? Is it necessarily indicative of a trend shift yet? Not necessarily, but it is something I think that we have to pay attention to, right? Because if this is a high time frame low or high that ends up being confirmed, the SPX could pull back a fair bit further. And, at that point, one of the things that we've kind of been talking about is what does that mean for crypto, right? Crypto has been sitting at support. It's been, I would call these conditions very, bearish chop, right? And we'll use the word predatory before we went live. I think that's the perfect word to describe it. You have on Bitcoin, it's going sideways, but it's bleeding, right? So it's really enticing you to short here and to support. And every time that you do, it's just finding more fuel to squeeze it back up higher again and just kind of prolong this process of, just bleeding into what are actually perp bids, because you have spot selling in this range, which I think is interesting. But I'm ready to get into it, guys. I know, like I said, we're finally getting that pullback in equities. I'm sure we want to talk about whether or not that could start to impact crypto. Is this a result of what's happening in China? Liquidity being taken out of the market. Then I definitely want to talk about some higher time frame implications as well for equities.
Hey guys.
Oh, what's up, Jackus?
Hey,
Jackus. We got a full squad today, guys. Now we got a full squad, but Jackus, I was just kind of setting the stage for markets today. We've got a pullback on equities. I think is it going to prove to be a lower high on the high time frame? Is it going to prove to be a pullback before continuation to all-time highs? I'm sure we'll find out in Q4. But I do believe, it's still a very important 4 to 6 week period for all markets, right? For us to be able to decipher their directionality here into Q4 and into December. But I want to open the floor, guys, because we got a full panel today. Would love to get y'all's thoughts on the market. Specifically today, this morning, what we're thinking about this pullback that we're seeing in equities and whether or not we think it's set to continue probably into next week, or, whether or not you think that we could see a reversal around these levels for potential continuation, right? Into all-time high later this year.
It's at a very interesting inflection point where I suppose from a technical perspective, I could see equities holding around here and sort of mounting that previous consolidation that we formed like a couple weeks ago. But at the same time, it's hard not to see. It's hard not to see something like, maybe not like the final leg down. I won't prospect out that far, but it's hard not to see a retest of, in my opinion, sub 4,300, 4,250, because even if we go down to that level, 4,200, you're basically just retesting the point of origin of the breakout. And we never really got a retest of that level. There's some high time frame gaps and inefficiencies. And I would make the argument that even if we came down to 4,200, we'd still be in a high time frame bullish uptrend. So yes, it's a very aggressive pullback, but I don't think that alone would be serious, like a reason for serious concern, because you're still, again, in a high time frame structurally sound uptrend. It's just that this year was so kind of parabolic and we just blasted off, really leaving a ton of gaps and inefficiencies and volume voids sort of just hanging out and just left behind in the dust. So, I'm in the pullback camp for now, especially that it's September, and we know that September is typically a pretty nasty month for equities, specifically the NASDAQ. It's the worst performing month going all the way back to 1985. So I think we could see some more downside. But again, I don't think it's like it's over. I just think that we could probably dip a couple hundred points, retest the point of origin, all that volume, all that consolidation from Q4 of last year and Q1 of this year, I guess, and into Q2. Yeah, and then potentially bounce off of that level and maybe even go to all-time highs. So I think lower before higher, truthfully, but that's just me.
Yeah, I think lower. For sure.
You like that level there, that 4,200?
Yeah, I do. I mean, it's been a big level for a long time. I mean, yeah, retest. I mean, we kind of got a retest to this high, right? Like we kind of got a retest, right? But I don't know. When I was just looking at that on like the daily, though, I mean, it doesn't quite look like this. It doesn't quite look like that. I would say it more so looks like this. You know what I mean? Where we sold off and then we kind of, if we're looking for like bear chop, you know what I mean? That's what that would look like. Maybe you're right. Maybe it doesn't get that final leg down, but like, you know,
it could. I don't know. I just, I won't be like diamond handing whatever positions I'm in right now for that move, mainly because my contracts expire end of September and October. So that would be an issue. But I mean, I'd probably be looking to take profit, sub 4,300.
Yeah. So that lines up pretty nicely. We bottom at like 41.70 the last week of September, and then like bull chop up to like a double top almost, and then we're going to all-time highs. It's over. Like that would be pretty predatory. That's just if we replay this. I don't know, just because the top looks pretty similar. These tops look more similar than like this.
It's hard not to see it as a complacency shoulder, if I'm being, I mean, it just,
yeah,
the way that it rounded too on NQ. I mean, ES did it too, but I'm watching NQ. Just the way that it rounded was just so clear, like on the 1 hour time frame, just like distribution, man. If you just go to the 1 hour, or maybe even like 2, yeah, something like that. It was just so. Can you go to not Heikinashi, like just normal candles?
yeah.
I mean, bro, that is like, or on QQQ, it doesn't look as prominent. I'm looking at NQ, the futures. That's like just so. It's just a waterfall, man. So like I look at that and I'm like, are you really expecting us to like bounce back above that quickly? It just is such obvious distribution.
Yeah.
To me, it feels like it wants to continue down, and I don't think it'll go straight down. It'll probably be like the last bleed, the one that we had from beginning of August to middle of August, where it was sort of a methodical like arc down. Oh my gosh, what am I looking at?
I forgot about that one. I made a schizo chart a long time ago. Oh, brother.
My eyes.
Yeah. Hey, now it's kind of hitting though. Kind of hitting.
Jackus, do you have a chart pulled up? I see something. You got.
I can do it later. I'm just watching your guys' opinion. And, learning.
Yeah.
All right. Cool.
I think if we look at the one too that I pulled up this morning there, if we look at NVIDIA, I do want to point out that RSI to chart pattern ratio there.
NVIDIA.
Yeah,
I'm ready to Max.
What's that, Jackus?
Just that I'm ready whenever it's needed.
Cool.
So I think like if you were to pull up the RSI here on the higher time frames and kind of look at the correlation, I think there's a pretty good scenario here. So you got the bear dip playing on the high time frame there.
Yeah.
What are we on the 1 day? Yeah, the 1 day. So you got the bear dip playing on the higher time frame, the 1 day. And I think even if you were to go on something like the monthly, and this is where it kind of gets dangerous, I do think we'll dip pretty deep on this. But let's go to the monthly real quick. If we were to pull that out and let's go ahead and let's put that on log.
Yeah.
And then after we do that, let's just kind of zoom that out. Now let's draw a top across all three of those rises. So
Wow, we're getting very high time frame here. Oh my gosh.
Will loves the monthly.
Let's draw it on the higher side.
What are you talking about?
So just let's draw an angled top. Sorry, angled top across. You're fine with those. You can leave those. But the angled top across those three highs right there.
Starting here.
Nope.
Right here.
Right there. Yep. So if we look at these three highs, and really you can kind of angle it a little more, they should all be touching the lines, because really you can kind of come all the way back to that original trend further back. Yep. And then so you do have like a little bit of room left there on the higher time frames. But if you pay attention to the RSI here, it's going the opposite direction, right? To me, it's almost like we're moving into a higher time frame topping pattern that could end up resulting really ugly for Nvidia. And this is kind of the thing I wanted to point out, and I didn't really get a chance to elaborate too much in the Giga chat about it, but I'm watching this specific. No, I think you still got room. Yeah, I think you still got room for upside. I've been watching this specifically, but I think like by the time you come up and touch that trend, you'll probably touch that line, and that's nuke time, right? That's
like 800.
That's
like,
but that's absolute destruction. Look
But
at the
I
downside
have a question,
poles.
man. Wouldn't you expect as the asset matures that the volatility and I guess expansion will be far more muted than like the preceding legs up? Because I mean, you're looking at Nvidia when it was a fraction of the the market cap that it is right now. So it's not surprising you're seeing monthly bear divs, because it's just not going to go as parabolic as it was when it was $13 a share. You know,
to a degree, like I think to kind of feed into what you're saying there, this could also be a swing fail, right? So it could. I mean, really, the potential here for upside to downside is substantially muted, right? Yeah, and I do think there's growth potential, as far as like not growth to the upside, but more or less like your growth potential starts to lack the higher and higher market cap you go.
Dude, this thing was 35 cents in 1999.
Yeah, that's what I'm saying. Like
that's
the
unbelievable.
The people that are in this, like they don't understand what they're buying, right? And they think they're buying generational wealth. But the reality is when you look at this, the growth is what I'm trying to point out here is not, hey, does this nuke here? Does this nuke later? The thing that I'm trying to point out here is that your growth potential is gone.
Once you start to see bear divs, it looks like Bitcoin, bro.
Yes. Once you start to see bear divs on the higher time frames, it's no longer a growth stock. It's just not. Your upside potential is
literally Bitcoin.
It's a new Apple. That's what it is. It's a new Apple. They need to start giving dividends, and that's the only way they're going to keep people buying from here. And arguably, I would say the same thing about Tesla. And I know a lot of people feel a different way about Tesla. When you start getting $1 trillion market caps, like your upside is capped, and so many people don't understand, money.
But here's what I thought about Apple, man. I remember watching Apple hit a 1 trillion market cap. I was in my car with a friend. We were driving to Chicago for the weekend. I live in Minnesota, so it's like a 6-hour drive. And I'm on my TD Ameritrade app, and I'm watching the first company to ever hit 1 trillion market cap. And I was like, wow, that's incredible. I was like, there's no way it's going to go much higher than that. Like, that's incredible. And then like 2 years later, it hit a 3 trillion market cap, So it's just the goalpost shifts so quickly, things change.
You made my exact point, right? It hit $1 trillion market cap. Is that growth? I mean, we'll say from 35 cents in 1999 to $458 right now. That's growth.
You're talking about Nvidia now?
Yeah.
What do you mean? Because the price went up?
No. I'm saying a 3x on something like Apple is nothing. Do you expect it to go 3 more x?
Well, I'm just saying if you had bought the breakout of 1 trillion 2 years later, you had 3 times as much money.
I mean, Apple was 5 cents.
Tucker, you want to throw a Bitcoin 30 to 60K range fractal on that Apple bad boy?
Yeah, I do.
That's for me, Max, that's sustainable, right? It sustains your liquidity. But if you're talking from a growth standpoint, I don't see it.
Yeah, right? I mean, Apple's where you go to preserve your wealth, not to create new not to create new wealth. I mean, there's going to be periods of time where it outperforms and does very well, if you're trading it. But
I think 90% of and this is another point I want to put out, and then
do it from the first bottom at 30K.
I would say another thing that most investors, or at least most people in current markets, probably look for is growth over preservation, right? Because if you're preserving, you have enough money at that point to where it's not a big deal, right? You can get money managers, you can get somebody to manage that money for you, and you're already in sustainability. Most people come to, I would say, shows like ours and other shows to learn how to grow money versus actually trying to sustain growth. Does that make sense?
Yeah, that's fair. Yeah, that's fair.
Hang on, fellas. Hang on.
Oh God, dude, that's not happening to Apple, man.
Hang on, fellas.
I mean,
I see a high time frame exhaustion pattern printing, but equity flows are a little bit different.
I mean, it can continue up forever. It doesn't matter. You're not going to grow though. That's the issue.
Will, such an Apple hater, man. You should try their products. Might change your life.
Yeah, you really should, Will.
You mean the same phone they've been distributing to us for like multiple years now?
That is true. That is true, dude. They don't. So I've got an iPhone 12 Pro Max or whatever, and it's gold, and I don't put a case on it, and people always see it, and they think I have like the newest, coolest iPhone. They're like, "What is that? Like, that's such a cool color." I'm like, "This is like 3 years old, man." I just.
You know what the funny part is, Max? I was around when phones were probably as big as your shoe, right?
Will, you were around when the Civil War began, man. You fought in every world war, every Civil War, man. You were
when I went to school.
Went extinct, Will.
When I went to school, nobody had cell phones. All right, so all I'm gonna say is phones went from the size of your shoe to the size of your palm back to the size of your shoe.
That is true. I remember there was like a race to see who could make this like technology the smallest and most compact. And then they were like, all right, we can do that. This actually isn't what people need. Because they're like, oh, the next phase in phones is not like portability. We've taken that too far. It's mobile streaming, and you need to have a nice HD, 4K screen or whatever. So they pivoted. But yeah,
I used to have the Razor. You remember the Razor?
Bro, a classic, man. The Razor was like, if you had a Razor, man, you were
a king.
You were a king. That's right.
Yeah.
When I was in high school, the Sidekick was really cool too, like going with the keyboard.
Yeah.
Yeah, that was cool. All right, let's pull up Jackus's charts. Jackus, if you're ready for us, man, we need that alpha. We need that Jackus alpha.
I'm ready, man. I was a bit nostalgic there with the phones because I used to go to. I remember the period before phones and PCs too. So
there you go. Jackus knows. See,
nowadays it's like normal when you have a phone when you are like, I don't know, like 4 years old, probably, maybe even earlier. But like I used to go to elementary school and none of us had phones, and then I remember using the infraport, right, and sending a song. Like we could have literally fit like only like 10 songs in the phone because that was the capacity of it.
Do you remember when buying ringtones was cool back in the day?
Oh,
yeah.
And now it's like everyone has their phones on silent or vibrate.
Wait, do you remember the ring back tone when someone would, you know what I'm talking about, when you would call them and it'll put, mine still does that, I'm pretty sure.
No way.
I think so. Like it did it for like 10 years longer than it should have. It just stayed with my number for some
What
reason.
song was it?
It was like some piano music.
No, it's probably like "Kiss Me Through the Phone" by Soulja.
Yeah, that's what I was gonna say. I was literally gonna say that.
No.
Yeah, and we were sending songs through the infraport, through the whole class. So it took like, I don't know, like 40 minutes to send a song from one phone to the other. Just crazy times.
Good times, good times.
Yeah. To the charts. So, what do I think? Well, not much has changed. There was this big move, and now we are consolidating, sort of expecting. So, I don't really care if we like make one more low, but I'm still expecting higher likes after. We had this like this was a nice. This is where I was actually calling it the first time the trend reversal, and there is a nice backstory to it because like we were in this ascending downward channel, then we broke that one. We took the lows right after. This is the breakout traders trying to get in, so they get in right here. Some more conservative ones get in here above these highs. Then where is their stop? It's right below this low, which is the low that broke the channel. We take them out. We create this breaker and we keep the liquidity above. So we bounced here and continued higher. And this was the big rally. This is where people start to flip. And I think it totally does make sense that we are now in this confirmed range, from this low to this high. And we've made just higher low sort of and lower high. And I think the range is established. And I think we stay here for a little longer. We could again, where's the tool? We could deviate below, close this FVG because this is the one that took us above this very significant high. This is like the higher time frame breaker. So right here is your support that might get hit, but I don't expect any drops below. I think majority of people are waiting for this retest of this support. I don't think we are getting that, at least now. And if we look at the VWAPs, we can see that the bear market has officially ended here when we broken above it. Now we are testing it from above. And if you look at the VWAP from the bottom, we can see there is still room for drop lower. So it's totally possible. But in case we spend more time here, then obviously this VWAP will follow higher and we don't need to drop that low. So it's always like sometimes people forget that markets needs time. So there is like sometimes when we run the spaces on Twitter, sometimes people be like 100k before end of the year, new all-time high on BTC, and then like sure, I cannot rule it out, but if it happens, that means straight up candle. And what happens after those? You get the retrace. So be careful how fast you want that to happen. You rather want a steady bull market, that keeps making these retests like in 2016, 17, right? You don't want the 2020, big candle up, or 2019, because those get retraced. And when you get this upside, the market simply needs to pause and consolidate. It needs to wait for the EMAs to catch up, right? So it doesn't matter really which ones we're gonna use here. Simply the market just wants to take a pause, take another breather, and I don't really see much reasons for us to go down. Like I don't see it. I think the Fed is really high with the rates now. I think they are paused. I don't think there is gonna be another hike, and I think that if there would be problems, they have enough room. They have enough room for the rates to drop. The economy in US for now remains strong, so I don't think there is a. I do agree, sort of. This is complacency, but the complacency can go above all-time highs still. So I think the real complacency begins in a slow crawl above here. Can't tell how long that's gonna be, but I think this is exactly the complacency you are looking for, and then the big moves are gonna happen. And again, you wanna watch, how do we drop? Because if the pullback, this is what I'm studying a lot lately. Is like it's not just like what level we approach; it's also how do we approach it, right? So it's the same analogy as with the 100 case with BTC. If you go in a straight candle, that's different than if you approach it with enough time and with enough pullbacks. And if, for example, we would break higher and then we would start making these slow pullback, I would be confident we head for another high. But for example, if we start making these slow swings here, sort of like a channel, with each high you create a sentiment, you create a bullish sentiment that there is the soft landing and blah blah blah. And then if you get a quick move down here, that's the impulse that shits that it's
But
gonna
Jack,
be bad.
wouldn't you say that's kind of what we've been doing? I mean, in a sense, is
So
that channel up, right? On a bigger time frame. If you were to like overlay that channel exactly where we are, where you just drew, right below you, I would arguably say we've been doing that. That's what a V-shaped recovery is. It's literally just a channel that is pretty much trying
this
to
one?
build hope. Yes.
This is the one?
Yeah.
Yeah, we can surely take like a pause here, as I was saying. It can take a while, but we need to see it from the broader context of like we had this. This is also the reason why we are moving up right now, because what I talked about here,
Broadening, falling. Yeah.
of these sentiment highs and lows, this is exactly what happened here on the higher time frames with these breaks. So like this is the first break, then we get another stop run, then another break. Now people getting hopeful again, just like here, and another break. And it's just like there wasn't really any sort of quick movement. There wasn't panic here. So it depends. Like there are many factors to take in take in mind or take into account, and I think for this very reason is exactly why we are heading um above this new high. And then if we would get like some quick sell off below, that would be a lot bullish.
What would
scary.
cause that? What would cause something like that, Jack? Would you just think it'd be unemployment spiking above like 5 or 6%?
I think that people still. I think that's the biggest mistake, that people misunderstand the timings. So like we got this big rise of the rates, and people were thinking like that everything's gonna go to zero, greatest depression ever, blah blah blah. But all these things they take a lot of time to start unfolding in the economy. The retailers in the US are now the consumer is now starting to spend less. He's starting to go to the lower dollar cost stores, and they are not spending as much. So it's starting to get there, but it takes time. We had the fastest ever rate hikes. If we would actually pull up the Fed chart, I will try to put it in to give you the idea. I'm gonna quickly put the interest rates there.
And guys, before Jackus gets into this chart, this is a good one. We're sitting at 11 likes right now. We got 25 people watching. Thank you guys so much for being here. If you're enjoying the content so far, please consider hitting that thumbs up button. Our TP for likes is usually always 20 to start, and then we try to get to 30 by the end. But thank you guys so much for being here on your Thursday here on Market Check, brought to you by Because Bitcoin. But if you could please help us hit that thumbs up button for us. It really makes the robot at YouTube headquarters take a liking to us, and that's important. We got to please the robot. But Jack, us back to you.
Yeah, go on.
Oh, I just want to point out this is interesting because I don't know if you remember, Max, but this is the thesis I've been talking about since almost January. Is well, maybe a little bit later, maybe like February, March, but a retest of all time high, a rollback over, and then completely obliterate the lows again. And as people get their backs blown out because they don't even see it coming.
Yeah.
So this is directly from the Fed, and it measures the percent change of the Fed rate hikes. So as you can see, going from the 60s, there were always these spikes when there was a large increase going fast. but we had nothing like this. Like this is the largest percentage change in history. Like it has never been like this and in this magnitude. Just to give you an idea, once again, 2008 crisis, it came from these rate hikes, and it took how long was it? It took nearly like 4 years to start taking effect. This is around like 2006 is when I think Michael Burry starts noticing the problems within the economy. And now, look at this one. We went up so quickly that it simply takes time for all these problems to start unfolding in the economy. All the old mortgages that will roll over and so on. It takes time, and all the companies before they start laying off, all these things, just they need to get absorbed. And so people saw that when we went straight to 5%, they thought it's gonna be back instantly, and we're gonna crash right back to zero. And this takes time, and this is what people, in my opinion, fail to understand. So this is my thesis for the new all-time high as well. Like it's the overall context, and again, I think I don't know what it's gonna be, what the problem's gonna be, but some will arise, and I'm expecting something like that. We'll see.
Yeah.
For now, like this is important. For now, I don't have anything else to expect than further upside. Until that changes in either the macro or the price action, then surely we can adapt. And I do expect some future problems that will unfold because of all that fast rate hikes and so on. But for now, this is the plan.
Yeah, I want to add to that too, Jack. It's like I think there's a lot of people they want to ignore the issues, right? And
Yeah,
what this market does at these positions, the way it is, it builds complacency, right? It builds patterns to where
yeah,
people just become more buyers and sellers, and then later on become exit liquidity when the crisis actually start to occur because they don't believe that price will go back down to the lows. They think that price will sustain around the highs, so they continue to buy into the notion that the bottom is in.
yeah, exactly. And it takes time to create the sentiment. So
Yeah,
I
yeah,
think
exactly.
this is also an interesting chart. I'll hide this one for now. So this is the NFP, right? Jobs created, and I think still that most people sort of. Sorry, sometimes my mic drops up. Uh, I think that so many people look at the NFPs, like they look at the single numbers and they try to draw conclusion from those. And surely it's used for the short-term volatility in the market, the release of the numbers. But like I don't think it really means anything unless we look at the broader trend. So for example here, right, you had nearly 10 years and it was sort of going sideways, didn't really mean anything. What you want to look at are the general trends and crosses below zero, which means that the economy is not producing jobs, it's actually losing them. And what we are seeing right now is and obviously this is, if I would pull up the SPX chart, this nicely lines up with all the past crises, like, the dot-com bubble, 08, obviously COVID, but that is sort of thing on its own. And I think we're gonna get a drop in the jobs created too. I don't know exactly when. I sort of drew a random random pattern here, but we can start to see that this trend is going down, and I cannot really see a sort of impulse to change it. And the panic, again, if we're gonna put in all the confluence, the panic should be once we start to get below zero on this trend, not just like one random spike 1 month, but like few months or the general trend. And then if we line it up with like the yield curve and so on, then in my opinion, the all the hints will be there. And what's also interesting is now that if we pull up the the unemployment rate with it, and we pull up the sorry, I'm not sure which one is it right now. Yeah, it's the initial jobless claims. So the shortcut is like this. If you pull up all of these, I'm gonna make them different color. So let's use, I don't know, red. And then you overlay. Okay, and I'm gonna invert the jobs created, right? And then if you put all of these together, you will find out that there is a clear pattern in the unemployment rate and the jobs created and jobless claims. So all of these, they tend to go together. And what goes first? It's the jobs created. So when the economist stops creating new jobs and falls below zero, problems are ahead. For example, if you look at here, we start to see the unemployment going up. This is like, it is like April 2008. We can see that there is a general trend, and we can start seeing the problems, lurping up. And I think we're gonna see this the same, but we need to understand that it's gonna take some time for this to unfold. And again,
which one typically is moving first? Is there a clear
The-
mover in
the
that?
the NFP
NFP?
goes first.
Okay.
And because it does make sense, right? So the economy stops producing new jobs, the trend is down. So what is the next one? There are no new jobs. People start to go for the jobless claims. Like they go on the sorry, I don't know what are the words in English, but they go
Unemployment? Yeah,
uh,
it's just they go on
they go
unemployment.
for the government agency, and they just say like, hey,
Yeah.
I don't have a job, right? So the next few months they start to report them in the jobless claims. And then the last one is always unemployment rate. So like each cycle you always have inflation goes up, that then the rates follow, and then later on you start to see the non-farm the jobs going down and so forth, and unemployment is always last. That's why I'm pretty confident that the unemployment is gonna go up. Erasing these.
You know what I find funny, Jackus? I think a lot of people ignored the obvious here, including me in the beginning. I won't even try and pretend like I knew. But I think the obvious here was the chips bill and a couple other bills, and people were ignoring that those things specifically were creating jobs in certain sectors, and
Yeah,
chips were continuing to fall, right? And
yeah,
people didn't realize that that would catch the chip market, push it up, create jobs, and create this fictitious
yeah,
stability of job uptrend, right? And
yeah,
now all that's coming back to fruition, and that's cooling back down to because the market was those were just basically fictitious jobs. That's what they were. They were
yeah.
stimulated by the government.
L-
And
l-
but go ahead. I'll
no,
let you see what you
sorry,
continue.
I didn't want to disturb you. I said that you ended there. Sorry.
No, I was just gonna say like that's the portion that a lot of people didn't realize what happened there, and I think those things get washed out as well as the downtrending job market will now start to catch up with the jobs that have already been created from the CHIPS bill, right? And
Yeah,
many other bills that were created. That we got to understand when the government or even the president, right, and the White House and so on and so forth are trying to get elections or trying to get reelected, they
yeah.
tend to make fictitious markets, which would be job markets and so on and so forth, that
Good
that
point.
don't really have a place and support the market temporarily, but eventually, the weight of the down pressure weighs into the market and ends up eating that alive, and it makes much more volatile bottoms. But go ahead.
Yeah, and I'm gonna continue on that one because I don't know if you guys are familiar with the broken window issue. I don't know. I think you guys heard of it. I'm not sure if I pronounce it correctly,
Yeah,
but
I've heard of it. Good.
yeah, it's basically like if you wanna create like if you want to create fake jobs, you can just go and smash someone else's window. So you break it, and then someone else has to go and repair that window, right? So you gave someone else a job, but in reality, you took the money from the guy who had to pay the guy to repair the window. So you just, imaginary created a false job, but the economy, it didn't really produce anything new. It didn't become more effective or anything.
Exactly.
You just created a fake job. And this is exactly what you were saying with the governmental products. Government keeps on creating these fake jobs, like all kinds of useless administration positions. And obviously these guys
they're also stimulating certain markets. Like the chips bill was essentially to say, okay, we need to increase the production of chips. What are you going to naturally expect? You're going to naturally expect them to pump up employment, right? Which is what they've done. But now a lot of these companies, and I would say Nvidia included, are probably starting to realize, hey, we overhired, even with these bills and this liquidity we've gotten from the government, and we're going to have to start cooling down. Those chips market is what supported the job market. There's no new jobs from other sectors that didn't get government money, right? Those sectors have only been downtrending and continuing to downtrend. Whereas like sectors that got government stimulus, right? We'll call it a STEMI package for the jobs market. That STEMI package is starting to run out. They either have to pump more liquidity into it, which is taking money from the US taxpayer, trying to create fictitious jobs, or this thing completely collapses as far as jobs go. I'm not saying like the US it collapses, just so people know for context, but I'm saying like the job market itself, the bottom falls out and this thing just gets crushed.
Yeah. Whenever government gets into anything, it's end up being fucked up.
True.
If we just can get rid of this is such a problem in Western economies that I'm actually a lot into this stuff in my free time, and even I have less government. Whenever you get more, things start to get problematic.
Less government intervention. Exactly. Yeah. I completely agree. And they call it a free market, but it's not a free market when you're coming in and fictitiously supporting certain sectors and certain markets.
Exactly. By the way, going back to the charts, just wanted to show this. Do you see this huge spike in the jobless claims? So this one came around, January, February, March, and it didn't really show in the unemployment numbers. And then we've seen sort of this pullback, but now finally we got the spike in unemployment. I don't know why it was. Maybe people applied for the jobless claim, and then they had like this 2, 3, 4 months something like the period before you actually leave the work, right? And then here I don't know how exactly is it measured, but like I think you guys get the point. And now we got this spike in unemployment, so this made people really look be scared, like, is unemployment going up? What's going on?
So if initial claims usually move a little bit before, which would make sense, why is it looking like it's moving down while unemployment's moving up? Is it just a fluke, or is it just
so you cannot really look at one-to-one correlation, just like I always say, whether I correlate the dollar index and BTC or anything. I think we can see the jobless claims starting to go down again, consolidate. So I think there is not going to be a big spike in unemployment yet. It's probably going to stay around these levels. Maybe it was just a small spike. It goes back to like 3.6 next month, and it stays there. So until we see the NFP and jobless claims starting to go up, we don't have to worry about unemployment. But once we do, we really want to look at the unemployment rate and once we start going below 0, that's the time to start paying attention. So I think we have time until then.
So that spike was in March, right?
Sorry, Will, what were you saying?
the spike that you were talking about that happened in March of this
Oh
year?
yeah.
Am I right on that, or
Wait.
What
Yeah, it
spike,
had
Will?
this one,
Oh,
right?
yeah?
Yeah.
So the top of
Okay.
that, basically, they came in and they started August 9th, which was ruled on or issued the proposal was issued on March 2023, was the CHIPS bill. A year after
Oh,
the Chips and Science Act, so on and so forth.
nice.
That basically went through in March of 2023. That's where I think that
Yeah.
spike occurred from.
Yeah, that's interesting. Really good context there. Will. Yeah, so going back to SPX, you know, what we talked about. I think I'll leave the word to you now, guys. Unless you have any questions.
Jack,
No,
let me ask you a question about something, brother.
Go on.
What do you say? What do you say about that?
What do you mean?
the yield curve inversion looks like.
Uh,
It's
uh, uh,
over, man.
yeah, but this is exactly what I talked about. Okay, let me put the chart from Twitter that I shared to you.
Jackets is saying basically it could still run a little bit even after the inversion
No,
happens.
for sure. I know.
Right.
Look at 08. Look at 08.
One sec. I'll just look it up because I've already posted a big thread on it.
Yeah. Go ahead.
So here is the picture. I'm just putting it from my
Here, I'll
Twitter.
put yours back on there.
I think you guys already seen this. So this is sort of the anticipation. Wait, what was the time when I was sharing it? In July 21st. Yeah. So usually like the problems don't start like so many people thought right here. If we look at the timings, look at them. So many people thought that once we crossed below zero, the depression is beginning. And so they were heavily short this entire time because the yield curve were below zero. But that's not the time to be short. The time to be short or out of the market is when we actually cross back above zero.
For sure.
Why? Why? Because that actually means that the Fed has started to drop the rates because there are starting to be some problems within the economy. So sometimes it takes it takes a while before we get there, and sometimes it's very soon. So if you start to I like basically what you want to do is wait until we start crossing back above zero. So I definitely agree with you there, mate, that that's the future problems. That's what I was exactly talking about. And by the way, this pattern of running the highs and running the lows is just amazing. If you
It's so predatory. It's so
Mhm.
evil, man. They just get everybody
That's
excited and then nuke it.
yeah. That's the thing we've been talking about since basically the end of or beginning of the year. Jackets is identifying that pattern and realizing that price can definitely run back to the highs and maybe even exceed them a little bit. Right? You see a couple of those patterns where they go above the high just to really trap liquidity, and then after they run that high, that's where they take their deep dive to the lower low.
yeah.
That's my biggest that's the thing that's probably the most convincing is just from a predatory perspective where you kind of operate under the assumption that the market is here to just basically trap money from inexperienced traders. There's a really large incentive for them to send this thing back to all-time highs because that
Yeah.
will utterly convince everybody that isn't watching what we're talking about right now that recession is over, recession's avoided, no problems ahead. But meanwhile, the problems are actually just beginning when we get to all-time highs because we're going
Exactly.
to have the uninversion of the yield curve and we're probably going to have
Exactly.
initial claims climbing. The Fed will at that point be paused and probably about to cut rates. And I guess if history shows us anything, and you just went through the whole thing, Jack, that's when things get really, really nasty. So they probably will send it to all-time highs. And that's why I'm expecting downside like for the rest of this month, and I'm expecting some more pain, but I'm not really going to prospect out beyond like a 200-point pullback on ES. I I don't want to think much further than that right now because I could see all-time highs still happening.
Yeah. I wanted shortly now, talk about this lower high, because I think many people could make a case that we are right here, right now, where we could make a lower high and then lower low, right? If I put it like this, we could make a case that, I'm sure someone is gonna make a fractal here and get 1,000 likes on it. That we are right here, and this is gonna happen. Oh shit!
Yeah, Jack, there's this one guy, I'm not gonna call him out, but him and I started with like the same amount of followers on Twitter like a year ago.
Yeah.
And I always joke that like I've got a full production team at Because Bitcoin, and like I mean it's very expensive to run the business, and
Yeah.
he's like tripled the amount of followers that we have just by like just only posting melt up charts and bull posting. I'm like, damn man, I'm running a full production. We can't even keep up with this guy who only just posts melt up charts. Crazy.
Dude, I absolutely feel with you because I feel the same. like there are so many people that started a Twitter account with me, right? And especially now with with all the drama on Twitter with like the paid shills. So like you guys are absolutely phenomenal. That's why I'm with you guys, because I love your text. I love, even if we don't agree, again, it's based on logic and good discussion, and you guys are nice to each other, and I love that. You guys produce quality, and I try to do the same. And what's frustrating is that it's just not appreciated from the market in terms of finance and both appreciation. And then you get all these guys that just like post like all these doom posts, bull posts for forever. You see the highest impressions ever. You see the people in the comments praising them. Then these guys get the biggest deals in terms of they get the biggest deals in terms of paid shills and everything. And even if they are exposed, they just say like, yeah, I didn't mean it. And then the guys are like, yeah, we believe you. You are the best anyway, and blah, blah, blah. It's just so frustrating, man. So I absolutely feel you, Max.
Yeah, no, that's so real, man. That's so real. Yeah.
But I would say to kind of add to that, Jack, is like I think that those guys, like a lot of them are like mostly bots, to be honest with you. I don't think they have any much real followers. I'm not even like, I know it sounds like,
dude, I don't know. I've seen some pretty real engagement on some of those posts from people.
Yeah, but those people can barely put a sentence together. Those same people that are.
I've gone on rants with like, I've literally, Tucker will remember this call. I called Tucker like a month ago, and I was like, dude, I can't stand this melt up crap anymore. Like, I cannot take it. This can't happen. Like, I was like, Tucker, am I going crazy? Like, tell me right now. And he's like, no, bro, it's not gonna happen. You're good, bro.
But that's why we have the team we have.
You're smart. This is logical. Like, don't give up on it. It's
like,
not just.
And we were mostly talking about Bitcoin too. He's like, tell me Bitcoin's going to nuke. We're at 29.5 at the time. I'm like, Bitcoin's going to nuke.
and I think some people take that as hopium or copium and like, oh yeah, you're just wrong. They can't even read a chart and they're telling you you're wrong. I love it. I would say also in that context, like I think our team is well balanced. I mean, there's been tons of times throughout the year where we have not come to agreements on many different fronts.
Only a couple will.
Hey, my upside thoughts, they've been on point, man. They've been on point. But whereas like I did get caught at the high here. And I ain't gonna try and show that I didn't. But those things happen.
So here's the thing, man. If you lose one trade, you're a complete fraud and LARP. That's the thing. You're not allowed to lose any trades. If you're wrong one time, career is over. That's it.
I don't some of these people, yeah.
That's how it goes, man. That's
on Twitter at least.
Perfect track
you just abide by them. You don't make them.
Yeah, you either post melt up charts and you can do whatever you want, or you have to win every trade you've ever taken ever, no matter what. So
all I'd say is like most of those melt up charts too, like they're like extremely zoomed out, right? Like
Yeah.
this will be Bitcoin in 2030, $1 million. So they just zoom they max out the chart and then point an arrow straight up to a price.
And they don't
And
do
I'm just
anything else. It's just
nothing
like,
else.
yeah, just like all these absolutely macro charts, all these rainbow charts and everything. It's like that's the only post they do. They don't post lower time frames. They don't post mid time frames. They don't post around different. Just Bitcoin totally zoomed out forever and just like moon.
Forever up $100 million, 10 years. Just buy. That's what they tell people. And I'm just like, bro, like, oh man. I
all
don't
right,
even know.
Jackus, what do you got for us here? Dow Jones.
Yeah, small talk with the difference here. Where I don't think we make a lower. Okay, let me first put on the SPX here. I don't think we make the lower high here because of what I few things. Okay, so there was a difference in this downward movement. This one came, in a quick fashion with a few FVGs inside, most likely, and it was really quick with no pullbacks inside. So we fill that and then we make a new low. There's a difference here. We make these pullbacks. So there is a different reason now to go above the all-time high than there was here. But essentially, this is the pattern that they keep on doing. Just create a pullback, then run to new highs, run to new lows, run to new highs. Again, upside, and then run the lows, run the highs, run the lows, and it's just keep on repeating wherever you go. It's just always run the highs, run the lows on the macro. Here COVID, run the highs, run the lows, run it higher. It's just insane. And adding the context for the upside, as you were saying, Max, I think exactly that's what people need. For now, people are still expecting this big pullback. Everyone that was sidelines from this, so like we take this whole period. This is where people are sidelines and are expecting a big drop lower, right? They are still expecting the big recession. It is
Even
not.
with the higher lows.
Yeah. Still, like this whole box is a sentiment for bearish bias. Here people are still hopeful until we break this one. On this leg, this is where people either some are still expecting it and are still on the sidelines, but there is a good amount of people that started to flip, especially here, right here. You heard it everywhere. They started to flip bullish and are now waiting for this bigger pullback to get in. So there are three groups of people, some that were long from here, some that are still expecting the big recession straight from here, going to zero, everything, how it is. And then there are some that sort of accepted that the trend has changed, but they're waiting for the bigger pullback to this area. I don't think, to put the majority on the wrong side, you don't give this pullback and you don't give the recession just yet. What you want to do is first trade people up, maybe small dip here, but then you want to go to the new highs, and with these highs, you create a sentiment. This is where people truly accept that no major pullback is happening. All these guys that were waiting for like the big, insane crash just cannot take it anymore, and above each of these highs they slowly start to creep in, and that's where you build the sentiment for the soft landing. Everything went smoothly, and then the rates finally, the yield curve turn, the jobless claims, and everything starts falling together.
What's funny here, Jackus? Just to cut in, I gotta take off here in a second. Me and Snorlax have kind of outlined the same exact scenario where we talked about the bull run happens, everything plays through as normal. In 2025, everybody gets destroyed. Somewhere's in 2025, 2026. And that's your bear market, right? That's your Bitcoin 4-year cycle. That's the bear market in equities. Everything all hits at once. And people then realize what actually happened.
Wow, that would be slaughter.
It would, because nobody's getting out, like, except for me. I'm not stupid. but nobody's going to try and get out in 2025. I can almost guarantee. I'm going to tell people this now, and I hope we keep this video because I bet you in 2025 you're going to hear super cycle, yada yada yada, boom boom, and then all of a sudden all these things hit. Nobody saw it coming. Enron all over again. 2.0. That's going to be Nvidia Enron 2.0. No, I'm just but you get what I'm saying, right? Like people just they don't understand the context of the reason. They don't understand the context of price action and how it just reacts and acts in the same areas over and over again. That's what a pattern is. A pattern is price acting in the same areas over and over again. And those FBDs, in my opinion, will be filled.
Yeah. Also, it's pretty crazy how like one group of people is the macro fundamental guys, and then you have the technical traders, and like each of these groups is hating on each other usually, and like they don't understand that they support each other, So
Exactly.
if you can combine both, that's beneficial in my opinion. For Dow Jones, I'm actually seeing like this bait in terms of the trend line, and I could see us taking a dip here below this low as many people are buying this support on the Dow Jones, and then getting that new high.
The rising wedge into the fake breakdown into the breakout. Yeah, I like that.
Some sort of like I can see so many people longing this one. It could still go. I think if we actually go higher here, I think we go then back down. So it will depend whether we go. I think if we first dip below here, I think we then go to new all-time high, sort of. But if we go higher here, then I think it's a bait, and then we go lower, and we take both of these lows. So it will be interesting to observe.
Jack, what are your thoughts on Bitcoin right now?
Jesus, it's just so tiring to even open that chart.
I know. It's terrible.
I gotta run, guys. Thanks.
Kill crypto. Yeah, I will have to go soon.
Oh, see you, Will.
See ya, Will. Good talk. BTC, let me open some empty chart. Let's find some. I actually like to chart Oenda sometimes because it's without the weekends and it's sometimes much cleaner than the. Yes, sometimes it is like that. Especially on the lower time frames though. But anyways, I wanted to go. Yeah, it kept to the low. Let me put on some spot chart. Can I use even bit? Dude, guys, do you remember the Bittrex era in crypto?
Bittrex?
Yeah.
Yeah.
It's crazy how like the industry is still so new that all these major players can just quickly, lose the market share like that, But like even if you remember Nokia, for example, right?
Yeah. Back to phones.
They were Apple of that time. They were like maybe they were even like one of the biggest companies in the world. I don't remember exactly. Okay, but they were like the biggest of phones, and then gone. A few bad choices gone. Crazy.
BlackBerry.
BlackBerry, yeah, it's a good point.
BlackBerry was huge, man. Everybody had Blackberries. Huge.
If you didn't have a BlackBerry, you were a peasant. If you were like over 20.
So what? Jesus, like, why does each chart have such a different wicks and everything? Just crazy.
That's an ugly chart, man. That's so ugly.
Ugh. Yeah, it is.
A little droopy.
It is ugly, and
that move right there, Jackus. The grayscale shit. Yeah, the grayscale tweet.
What a scam.
Scam. I think it will depend how we react around this area. I think if we just tap in, like, lower time trends is just mass. If we go in, like, and obviously there is no volatility on Bitstamp, but or liquidity, but like it's crazy. It's just like seriously, man. It's like 3 weeks. How long is it? 4 weeks since we are like in this fucking whatever it is. Yeah, I don't even want to go to lower time frames. So the only level that's interesting here right now, or two levels, is these two, and I think you really shouldn't care much about anything else. If we just sweep into this one, I think, and it's crazy how bearish the sentiment is right now. So you should be really on a watch out for some possible reversal. But until it happens in the chart, we still need to expect these lows to get swept. Obviously, there is the sort of 22, like this is the area that should interest you if we drop, and shit. And if we just sweep into here, I would expect the June low to get swept. I think many people are expecting that. They are trying to frustrate each shorts that are trying to catch that short. So I still think that's the move right now. But I would also be ready, and I think many people should be, that if we break into this, we could fill this gap, this FVG. So it will depend. In case there is a spike, be careful how we react here. If it's just a wake, then probably down straight next few days. And I'm actually gonna pull up a different chart, to give in the more higher time frame context. I absolutely love this chart. Be watching it over and over again. But so it's the mere multiple bands, and it's not some magic, but it sort of shows you where we are, right? And what I found absolutely amazing, that each time we dipped to the like incredibly oversold area, that was like pretty much the bottom, except of course the FTX deviation. And just look how oversold right now we are compared to like the past cycles. So and how long this is taking. If we take the big sell-off in early 2022, it was June, right? So like how long did it take? And compare that to this one, to this drop. If we compare it from here to here, then let me actually put it here. This one did take like 76 bars, whatever. I'm using the 1 day here. So that's an equivalent of this time, which is pretty interesting if we compare it. And if we compare it with like the 2018, dude, we are now close to COVID. Pretty interesting too.
We're dangerously close to COVID, huh?
Yeah, like if you take, like, that's why I say that like this is a deep discount in general, and people should be really careful, expecting some huge drop. I mean, it can still come, and for me, it's this level. This is the invalidation for me. But I think until then, I don't think anyone knows anymore. So I'm just sort of keeping an eye on whatever here. Like I
So
can't.
if your idea of equities maybe pulling back a little bit deeper and then moving towards all-time highs going into the end of the year or early next year happens,
Good point.
then I would think that Bitcoin could probably dip to like 22 and then start to rally maybe up to 40K. But then my question following that, if you would generally agree with those price levels, if we do see equities go, if ES goes to like 5,000 or 5,100, and
Yeah.
then the Fed not only pauses but begins to cut, and we see the unemployment rate and initial claims start to climb, what do you think is going to happen to Bitcoin if equities go towards all-time, or not all-time lows, right? But like a new local low below 3,500 where we bottomed the first time? What would
Yeah.
happen to Bitcoin in that instance?
So I have few scenarios in my mind. I think, if this one is playing out, and let's say we do drop here on SPX, it's possible we also drop on BTC here. But then again, I'm expecting further upside, and I think that the big upside for BTC comes around these levels for SPX. So the majority of the move for SPX it has already came, and I think here people start to think, hey, it's risk on again, and I think BTC catches up in the time, because if we still measure like the top to where we are, BTC is heavily lagging, and what it always does is it tends to catch up, and generally this high is this high for BTC. So I think that's still where we are heading later in the year or next year. Hard to tell the timings, probably. Hard to tell like when exactly is going to be the trigger. But again, if my thesis is for further upside for SPX, then obviously we can drop here with BTC, but then BTC is going to catch up. And then when your question, if we drop here below, okay, so I do think that BTC distributes, let me put on clean chart with more history. So I think that BTC distributes above here,
So, Jackus, one counter to that is Bitcoin has never existed during like a serious Fed tightening cycle. I know that interest rates were rising between like 2017 and 2019 for a little bit, but we've never had Bitcoin exist in a time when we saw a serious climb and sustained, higher above 5% unemployment. And I think I would use something like ARK as an example, right? So like small cap growth companies that they feel the pressure or the lack of liquidity a lot more than something like S&P 500 or NASDAQ. I feel like Bitcoin is just so much more interest rate and liquidity sensitive because it's traded and treated like, a high beta to basically just investing in stocks, where during frothy times you're going to outperform, and during times like this where there's a lack of liquidity and accessible cheap debt, it just doesn't have any legs to stand on. So I would look at I would look at an ETF like ARKK, Kathy Wood's ETF, and I would say, well, I think it's extremely unlikely that ARK manages to climb up to that level and take out that that same high that you have drawn for SPX, even if the equity indexes go to all-time highs, just because there's just not money to send them there right now. It just seems like it's all concentrated in mega cap tech because
True.
there's no yeah, anyways, you get the point, I guess. But
yeah,
it just seems like such a crazy move up on Bitcoin. I don't know if I could see 50K.
It always feels like a huge move, and then BTC just does it like out of nothing. Like in a few days it happens, and I don't think like this has always been the case in the history, and BTC always comes with a surprising moves that just like blown out everyone. I wouldn't care about it. I think what you said there about BTC being like a next tech. When you said that, sorry about that. When you said that BTC is like the next tech stock, I don't agree with that. I'm saying, and I think the world will slowly realize that and start to price that in. And I think it's already happening right now. Again, that BTC is a digital commodity, and I've put, we can. I'm running out of time now, but we can talk about it next time. Why I think so, and I think that with this next move, when SPX drops like this, I think BTC is gonna drop as well. I'm not foolish to say like when there is a crisis, everything falls, usually. But what differs is how bought these assets get. You can even see it inside of crypto. So sometimes when there is a big drop in BTC, so like the general market drops as well. But if you have some outperformer that is in an uptrend, what that coin does is that it just pulls back to the prior support, and that's what you need to keep in mind. So if we can sort of agree that the risk is back on once we get higher and BTC pull up this move, then what happens is that we have reclaimed the higher time frame range, and I think this is going to be held. I think we could retest it. It will depend on how we get there, as I was saying earlier. How we get to levels is super important, and in what time, how long does it take, and so forth. So I cannot exactly say, but for me this area is super important. And then with this drop is in SPX, whenever it comes, whether it's 24, 25, I'm eyeing a pullback for BTC. But again, I cannot tell the exact timings. For now, I know there is the room for the upside on both, and that's what I care about the next immediate move. And I have scenarios for the future. I know what to expect, but I need to look at when does it come,
Mm-hmm.
Make
No,
sense?
no, that makes sense. That makes sense. All right, well, we won't hold you up. I know you got some stuff, but thanks for coming on, Jack. It's great
For
to
sure.
great to see your charts, man. We'll have you on again soon, and yeah, I want to dive more into Bitcoin and ETH here,
Yes.
and kind of prospect what could happen if equities do go to all-time highs. So that'd be fun.
I want to hear you guys talk next time more, and just me like asking questions.
No, people, they hear us talk every day, man. They hear us talk every day. It's
They
good to
like
have you talk here. Yeah.
Okay, have fun, guys. See ya.
See ya. Thanks, Jack.
Jackus. We can go ahead and wrap it up if unless y'all are wanting to talk about anything else today. You can save it for the Friday show.
Yeah, I think I'm good. We'll save some for tomorrow. But yeah, that was a great talk.
Yeah.
Cool. Yeah, sorry I had to dip out there. It was funny because my Wi-Fi was working, but my internet was out. I'm like, how does that even work? Like, what am I paying for?
Yeah.
What am I paying for? But yeah, no. Shout out to Jackus for coming on. It was a great show. Shout out to Will's Outlook, even though he left a little bit sooner than Jackus. But yeah, guys, thank you so much for being here on this beautiful Thursday morning. Well, I guess it depends kind of on where you are. It looks beautifully sunny outside where I'm at right now. So I hope if it's not, if sunny or not, hopefully you spend some time getting some exercise, getting outside today, enjoying yourself, right? Remember that markets aren't the only thing that we have going on in life, right? But yeah.
Such a lie. What's wrong
That
with
is a
you,
lie.
Tommy?
That is a lie. What am I saying?
Yeah, nonsense, man.
Yeah, I'm going to be scalping some like unheard of altcoin, I'm sure at like 2 or 3 in the morning tonight. Something ridiculous like that. But either way, guys, thanks for tuning in. Great show, guys. We will be back tomorrow. If you really enjoyed the content, we do have links to some of our premium content in the description of this YouTube video, as well as the link tree of our Twitter bio. I don't think we're having a space today just because Wabi's got some stuff going on. So, sorry, I lost my train of thought there for a second. So, and maybe we decided to do something, maybe we don't. But if we don't see you guys until tomorrow, we will see the Giga Chads at the afternoon call later today. And of course, we'll see you guys back for Market Check tomorrow morning. But y'all have a great rest of your Thursday. And thanks again for tuning in.